Nigeria's banking sector has gone through a tumultuous time since the financial crisis, but the country's Tier 2 banks have outpaced Tier 1 banks in loan growth this year. So some fantastic numbers coming through from the likes of First Bank and Diamond Bank. So let's look at how the local banking sector here in South Africa compares to that of Nigeria. We've got Adeolu Omatolo, banking analyst at ARM Investment Managers, specifically taking a look at the prospects for South African banks in Nigeria. Adeolu, thank you so much for your time today. So talk to us about the competitive landscape in Nigeria and what are your views on how it's been shaped by what's taken place as a result of the financial crisis?
I think what we're seeing over the last few quarters really is a reawakening of the banking sector, essentially. As banks become more active in terms of seeking funds, deposits, as well as creating assets, inevitably you expect that competition will get tighter. And we've seen that play out in a number of places within the banking sector. Add to that changes in the operating environment, the fact that we're getting a lot more entrants coming into the banking space. You have new licenses being granted to new players. You have some other old existing players, some of the distressed banks coming back into full operational capabilities. What you then get is a mix of a tighter operating environment as well as an increased number of active players, which definitely means that we're seeing increasingly stronger competition within the banking space.
Now there's some key top tier players, the likes of First Bank with a market share of 16.9%, but still many banks, even after the consolidation, you're looking at Standard Bank, Stanbic IBTC with a market share of 1.9% of total deposits. And this share price in Nigeria has been hit this year. It's down 25%. It certainly has been a laggard. Why is the market so concerned about Stanbic or Standard Bank subsidiary in Nigeria?
I think for the most part, most of what you're seeing in terms of prices for a lot of the banks is basically a momentum play. For a number of the larger domestic banks, what you've seen is that over the course of last year, price performance has not been strong, even though we had steady improvement in terms of operating performance. And then, in contrast to that, in this year, you've had a sort of performance momentum continue, but you had a stronger reflection in terms of prices, so which is why a lot of those stocks, banking stocks, as you mentioned, are currently in the black. For likes of IBTC, they had a very strong performance last year. What you saw was that the share price went up significantly, but that again was backed by strong performance just based on the initiatives that they are taking in the retail banking space and all of that. Now, coming into this year, like I mentioned, as competition tightened, inevitably some of the smaller banks started to feel the pinch. In spite of what Stanbic has done over the last 2 years, roughly, they're still relatively small within the banking space. Accordingly, what happens then is that the price, the valuation premium in terms of price to book, which is one of the highest in the industry, starts to hurt them as investors try to look for more attractive value plays. So we think that's what's playing out so far for a number of those companies.
And we know that Nedbank and ETI have a partnership in Nigeria with an option to increase, in fact, a stake in ETI. And First Rand being given a merchant banking license, it also wants to make an acquisition. But overall, what do you make of the chances of South African banks making headway in Nigeria?
I think we've seen significantly more interest from South African banks. I think what's been driving that basically is the growth opportunity that's perceived to be in the Nigerian banking space. The alliance between Nedbank and ETI really a strategic one, and we're interested to see how that goes forward in terms of the mutual subscription they could do in terms of shareholding. But basically, in terms of wanting to capture growth markets for both of those entities, it's a bit of a divide and conquer strategy, so to say, whereas they could sort of separately focus on different areas of the African space and then possibly maybe a few years down the line merge operations. I think the story of what's enticing Nedbank and ETI is perhaps the same for virtually every other South African bank. You have a rapidly growing economy. You have the fact that a significant portion of the population is yet unbanked, and there's opportunity for financial innovation really within that space. We think that's what's starting to play out for a number of them who have the balance sheets and who are really ready to put down the infrastructure on ground. They seem to be perhaps looking to capture those opportunities I've mentioned.